Hello friends, welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Prince pipes which is coming at attractive levels currently. So let's understand about the business. Let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Prince Pipes, a small request that kindly support me on Patreon. Once you do that, help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts I put up from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. Now about the company. Established in 1987, Prince Pipes provides a range of plumbing pipes and solutions. They manufacture a number of PVC pipes, sewage and agricultural pipes. There's high profit growth and return ratios, and over the last 2 years, the company has done exceedingly well in gaining more market share and increased its market cap from a few hundred crores to currently 6,700 crores. They also provide solutions for borewell systems and water storage, one of the smaller names in this space. If you look at the numbers, these are Q4 numbers. So sales did go up by around 18%, but again, as with other companies, it had a lot of margin pressure with raw material costs rising, and so profit dipped to 88 crores from 97 crores. So that's a dip of around 10% on profitability. Low debt, high institutional and promoter holding, only 9% free float is there with the retail investors, 19%, sorry, and larger, you can say, stake are with the larger institutions. ROE of around 23% is pretty decent, but margins have dipped from 18% to 15%, and probably there will be margin pressure on the stock for at least a quarter or so. As for the performance, it has been a gem of a stock. Over the last 2 years, it has done exceedingly well. It has been 8x in the last 2 years or so. If you look at from the pandemic, it has gone up multiple fold. Numbers have also supported the surge in the stock price, and they have gained market share. There is no way for the company to do so well on the numbers front unless and until it does well on the you can say in terms of, you can say, gaining more market share. Margins have shrunk on back of high raw material cost or etc. But I think going forward from the festive season, things will be much better for the company. May remain under pressure for a quarter or so, that is there, but I think from next year, I think FY24 and especially 2023 as a calendar year should be pretty good. Will only be an opportunity to buy. If you look at the salient features of the company, it had low market cap for such a business about 2 years back, and it was trading at around 400-500 crores market cap, just about one time sales. And that's where I picked up the stock and made a video about 1.5 years back. But it has gained market share now, and the market cap has swelled to around 6,500 crore now. But even now, with around 2,500 crores of sales and about 3,000 crores of sales coming in for FY23, it's trading at around 2.3 times sales, which is not very expensive. So any dip it can be bought at. Business growing with expanding profits over the last 2-3 years is also a huge positive for the company, and is one of the better small cap company in this space. And there's scope of strong order book from IRCTC. So IRCTC is one of their biggest clients, and over a period of time they should get more orders coming in, and there is an order, you can say, order book that is available for them from that company. So over a period of say 1 to 2 years, it should have a good inflow of sales coming in. So scope of margin expansion and better realization once things normalize is always there. So I believe that margin pressure could remain till September, October, but by the end of the year it should abate, and from calendar year 2023 margins should expand. So expecting big numbers in FY24. And there has been a better product mix compared to other pipe companies, other plumbing companies that are in the market, and that has also given a good fillip to the top line and bottom line for the company, and hopefully will do the same in FY24 for Prince Pipes. In terms of the risk which are attached with this sort of a business or this industry, being in the infra space is a huge risk because of the higher you can say interest rates at the moment. There would be pressure on infrastructure spends by companies, by individuals, etc. You look at real estate companies not selling that much of their products compared to say 2 3 quarters back, so there will be pressure there. A slowdown in economy will hurt numbers, so numbers will not be that magnificent as it was envisaged earlier, and that was probably the reason why the stock has fell from 800 to 550. And no one knows how long the sentiment will remain damp for the real estate sector. Now this has to do well. The real estate sector has to do well for pipes and plumbing companies to do well, but I have a feeling that during the festive season things should get along, because you'll see that over the last 2 years there have been pandemic issues, and so things have not been very smooth. But this time around, with the non-pandemic festive season, things should be better. Yes, from March April onward there could be pressure again on the numbers because of inflation and many other factors, but over a period of between October to March, things should look good. Inflation remaining high across the board. If inflation really picks up again, and you can say that the dollar escalates, plus you have the situation with the oil prices that goes again to $120 per barrel, etc., then things could completely reverse on this front. And this is why these companies are high risk sectors to invest into and not safe sectors. But yes, valuations are attractive at the moment to invest into if you have a 2 3 year time frame, because over that period this should, all these factors of or risk should stabilize altogether. High debt is a major concern at the moment, and hopefully going forward they will reduce debt further. And then competition from other larger players. So suppose other players, and they are all there are a number of listed players which are large, which could probably have change their product mix and bring in more, you can say, cost variability and efficiency. Then there could be more competition coming in on that front, so that is also a risk, always a risk over a period of time for this company. In terms of technicals, we have seen that major long-term support is around the 550 levels, and a resistance zone is 780, 850 levels, around those region. Currently the stock is around 600, so one can buy in this range of 540 to 600. Strong up move is only expected above 800, so what one can do is probably buy as a trade only above 800 and not at the moment. Or if you are buying as a trade, then keep a strict stop loss around 550 560. That would be the call. Otherwise you could get the stock, means the stock could go as low as 470 480 as well. So it may consolidate in this 100 point band of 650 to 550 over the next 3 4 months, and then an up move is expected in 2023. A big up move is expected in 2023. Technically it is strong, but is extremely stretched at the moment, and so there could be a situation where the stock may just consolidate and nothing else happens. So this is absolutely for long term investors. If those who really want to buy from a 2 3 year perspective can really get ahead and buy into the stock in tranches. So wait for massive fall, bad days in the market to get into it. Probably August, mid August would be the time to really get into such kind of stocks. So my call on the stock is, if you have it, then hold on to the stock even if you are in losses. I think things should get along over the next 5 years period. Still looks nascent from a 5 year perspective, looks very decent at around 5 6,000 crore market cap, and trades at merely, as I said, 2 times sales, just about 2.3 times sales, because it has run up over the last 1 or 2 weeks. And when I made the presentation per se, it was around 2 weeks back. So now at this point of time, I would still say trading at 2.3 2.4 times sales, it looks pretty good. Can give consistent 20 to 25% CAGR return over the next 5 7 years, so that's pretty good, probably double in 4 years kind of a stock at least. And keep track of events and numbers. If numbers really become bad or they are losing market share, other companies are getting ahead, then you need not probably hold on to the stock. But it looks like it could be a very good 4 5 years for the company, and put 5% of your total holding into such stocks. So this was my video on Prince Price. Please like and subscribe my channel, hit the bell icon so you get my videos straight away when I post it. Can you support me on Patreon? Thanks a lot for watching.